What's going on, guys? Gabe with ReviewDork. AMC, red day. So what? Who cares? You buy more at bargain prices and you hold. Now, AMC, if we look at the daily here, respecting this trend line, we need more data points. We go to the 4-hour daily here, and we could see AMC is simply acting in its cycle. It's doing nothing that we haven't seen before and nothing that we shouldn't expect. No reason to panic. 8.5% sounds like a lot, but we've been through worse. Let's go ahead and look at the minute chart. We have support here that we immediately found after market open, and I thought that was where we were essentially going to consolidate for the rest of the day. We ran up and we found support just shy of 51.67 or 51.69. And I thought of this as just natural behavior because anything after 51.69 just opens up a very wide arena for the stock to play in. Let's go ahead and talk about why nobody wants that right now. We have 137,000 calls in the money expiring September 17th. And to further this thesis here, we have the trigger price of 46.52, which would trigger SSR. And that did not happen. However, we got strategically close. Guys, this just doesn't happen out of coincidence. This is strategic. 46.97. We avoid triggering an SSR to avoid giving the bulls an upper hand. Now, when we go back to this 137, this is important, and disadvantaging the bulls is important. Why? Because we have something called max Payne, and this is essentially a theory, sometimes called option ping, and it refers to the price action of the underlying stock as they come into options expiration. Price action is pulled to and pinned at a particular price like a magnet. This price is usually the option strike with the highest open interest. Some consider this phenomenon to be total nonsense and sorcery. However, those that have spent enough time watching financial markets have likely witnessed this type of price action a time or two. Now, certain traders, market makers, have a large incentive to keep a stock near a certain price at the time of the option's expiration. According to the theory, this is due to the tendency for the price of the underlying stock to gravitate towards its maximum Payne strike price, the price where the greatest dollar value of those options will expire worthless. Max Payne assumes the option with the highest open interest has the highest number of options traders who are long on that option and who will lose the most amount of money. That's a very long way of saying delta hedging. And with that being said, guys, there's a reason why we say, hey, don't buy the options, buy the stock, because that opens up the market makers to do their sorcery and voodoo magic. Now, again, we had some other data such as CPI data, but it's really, really interesting where we go ahead and reference CPI data or the fact that the market's red and AMC not showing its resilience, even though AMC is a negative beta stock, a negative beta of, I believe, 4.5. Now, let's go ahead and look at AMC institutional ownership since August, the middle of August. And all this green means that the big boys have conviction in stock. Smart money is following dumb money's lead. So with that being said, even if it's a red day, I really don't see this being a trend reversal. I feel that AMC will continue its move upwards. So you just buy, you hold, you buy some more, you enjoy the discounts. That's it. Just look at it as a discounted hooker. When are you going to get an 8% discount on a hooker in a corner? Never. She's got a flat fee. This is Gabe. I'm signing out. Make sure you guys like, share, subscribe. Peace.